But the Indian auto index has fared significantly better than the frontline indices this year. It's clocked a 12% outperformance so far. To discuss the road ahead, we're joined by Basudeb Banerjee, the analyst at ICICI Securities. Basu, thanks a lot for joining in. I wanted to ask you your view first on Maruti, because the stock has rallied quite a bit. It's up about 10% from its May lows. And some people believe that maybe the excitement is unwarranted. Your thoughts?
See, if you look at from a sensitivity perspective, gaining back market share by 200-300 basis points will be of less importance than industry itself growing by 14-15%. Along with that, you can see the decline in the raw mat basket, be it aluminium or copper or steel or rare earth metals. And also, as you highlighted, the dollar-yen movement. So if I combine the raw material basket movement, the currency movement, and industry retail levels, if you look at present numbers, and Maruti clocking 1.65 a month, plus whatever new launch benefit will come into the numbers. If I combine all those things in overall scheme of things, we are positive on the stock even at present levels.
Okay, so you're positive on the stock even at present levels. Wanted your thoughts overall on the sector, because there's a combined positive, right? On one hand, demand is picking up across passenger vehicles, commercial vehicles. On the other hand, raw material price pressures are abating. And then we have a slew of new launches as well. Do you think all the positives are factored into this 10-15% rally we've seen already, or could there be more to go? And what are your top stocks that you're watching?
Yeah, so as you rightly said, if you look at consensus estimates for last 3 months, barring Mahindra, hardly there has been any consensus upgrades in any of the other auto OEM stocks. And simultaneously, if you look at 1Q retail numbers, despite seasonally being an adverse period, it is flat or better QOQ across trucks, cars, and two-wheeler segments. So retail numbers being pretty strong, waiting period across segments being there, and third, raw mat basket would have fallen by almost 15%. Now, typically, if you see cumulative price hikes in last 12 months for a same model of car or a two-wheeler would have been anywhere around 10 to 12%. But in a falling raw mat scenario with waiting period for the models, we don't expect any cutback in prices of the vehicles. So that is clearly indicating an improvement in gross margin and subsequently percolating to EBITDA margin level. And that is the perfect recipe for consensus earnings upgrades in coming months, which has been pending in a falling raw mat scenario. So as you mentioned, overall from a sector perspective, whether this 10% rally is more than enough, we believe no, there is more upside left in the overall space.
Okay, Basudeb, what about the two-wheeler space? You know, Hero MotoCorp, Bajaj, they haven't given returns in last many years actually, you know. Royal Enfield as well. It's been a painful period for the two-wheelers. How do you approach this space? Do you believe the best is yet to come? And I believe you're more positive on TVS Motors, which is relatively more expensive. Okay, run us through the rationale.
So if you look at last 3 years, cumulative decline in two-wheeler industry is roughly 36% because of various emission norm-led price hikes, metal inflation-led price hikes, insurance changes, etc. So under that circumstances, the companies never got benefit from operating leverage, and that coincided with a rising raw mat basket scenario. So that's why earnings decline, volume decline all happened in last 3-year period. And as you rightly mentioned, these stocks underperform massively. Now, at least if you look at 1Q, retails are almost 10% up over 4Q numbers. And monthly retail momentum is pretty decent coming out of the wedding season. And that is coinciding with a falling raw mat basket. So that is why relatively where the low valuation scenario in place like Hero is giving an opportunity to buy. But we agree from a long-term compounding angle, two-wheeler space will be relatively limited to around that 6 and 7% growth. And within that, TVS having its diversified portfolio, exports portfolio, premium bike portfolio, and benefiting from raw mat basket should grow, outperform the peers the most, and that's why we are still positive on TVS from present levels.
Okay, still positive on TVS. A final word from your end on what's happening with Tata Motors. Well, you know, yesterday you heard about the Tata Nexon catching fire. Of course, the management was quick to clarify that this was the first fire in an EV in about 30,000 EVs that they have sold. But we've seen these incidents happen in the two-wheeler space as well. You think it would dent sentiment in any way or not quite?
See, it's just the nascent stage of EV evolution in India. As you rightly mentioned, you can see on media what's happening with various two-wheeler brands. And Nexon has been the pioneer in the EV car space in India, selling almost 3,000 plus units a month. So after seeing tremendous success for almost a year, this one incident I don't think should be that much detrimental from a brand equity perspective. But overall, from a Tata Motors as a business perspective, I'd like to highlight, if you see, its next 12 months is going to be a combination of tailwinds across the businesses, be it domestic CV business, which is scaling up, along with steel prices moving favorable. India car business, as you can see, they are making new highs every month, and also they are turning profitable almost at equivalent levels to industry peers. Plus JLR coming out of the semiconductor issue gradually. China lockdowns are more or less getting factored in 1Q numbers. So overall, if you look at as a combination of domestic trucks, domestic car and JLR, yes, a long way to go from current levels on the upside.
Thanks very much for your time. Good speaking with you and getting that perspective. That's an important point which Sonia raised about safety, EV safety. And I guess it's not really about this company or that company, but generally, I guess, a reassurance that, you know, there's no problem, structural underlying problem.